What's up? My name is Jack Murphy, and this is the 44th dividend income report video where I go into my nearly $12,000 dividend portfolio and look at my dividends, the best and worst stocks in my portfolio, and what stocks I'm buying and selling. So like I said, this is the 44th episode, and this is coming out on the 7th, about a week late. This is the latest I've ever posted one of these videos. It's my bad. Usually try to get these out at the beginning of the month, but nonetheless, we're going to get into the portfolio's performance first. So for the month of October, I got about a 1.11% return, which isn't too bad, but unfortunately, the S&P 500 outperformed me, getting about a 2.34% return. The NASDAQ also outperformed me and the S&P 500 at around a 4.72% return, and then the Dow Jones also outperformed me and the S&P 500 at around a 2.6% return. Let's also look at my portfolio since the recomposition on March 5th. Unfortunately, I have been heavily outperformed since then, getting around an 8% return. The S&P 500 has around an 18% return since then. The NASDAQ has had nearly a 30% return, and the Dow Jones has had around a 12% return. Year to date, I've had over a 12% return, opposed to the S&P 500 having around a 16% return. NASDAQ still beat both of us at around a 21% return, and then the Dow Jones had a similar return to me at around 12%. But the common theme is my portfolio is not keeping up with the major indexes, at least the S&P 500 and NASDAQ. Now, these are the majority of my Roth IRA, and the Roth IRA is doing pretty well, but this is the portfolio I manage, so I want to try to beat the S&P 500 in it, along with getting good dividend returns. So I am going to probably consider between now and March a plan to add more growth to my portfolio, and then around the year 4 mark in this portfolio, implement it. So that's probably what I'm going to be trying to do going forward. There might be some changes here and then before then, but by March 2026 and year 4 in this portfolio, I am going to do another recomposition to try to add more growth to my portfolio. So here are the returns of all the stocks in my portfolio, and we'll look at the worst three first. SCHD had a negative 2.83% return. That's supposed to be the safe dividend ETF. It sucks to see them have bad months where it's down over 2%, but it'll probably swing back up. It's always paying me a good dividend, so I'm not too worried about that position. Realty income down about 4%. That is a little more concerning. That is a good monthly dividend payer, but realty income probably will be one of the stocks I decide to cut within the next 6 months. I would like to find a good exit point for it, so I'm not going to rush that, or I'm not going to stick to 6 months. But whenever I have a good exit for realty income, I'm going to move that money somewhere else because it just doesn't have the growth potential I want stocks in this portfolio to have, because I'm going to have this portfolio for many, many years. Attribute Group is also another stock I'm probably going to think about selling. Negative 15% in 1 month because of bad earnings really hurts, because my position has been doing so well for a long time. I do need to consider that it is at potentially the top of its range where the stock price could sit, unless they come out with some new product or get a ton of market share in some type of nicotine product. It's unlikely I'm going to see a lot more growth from them, so I should probably move that money to somewhere with more growth potential. Those were the worst three. Now we'll look at the best three this month. Chevron had a positive 2.03% growth. Chevron is also another stock I'm potentially going to sell. It has been doing good, and it is paying good dividends in my portfolio, but there's not a ton of growth potential with Chevron long term. They're already a pretty big oil company, so I'm going to let it sit in my portfolio for now. Oil and gas is in demand, so Chevron stock should be going up at least a little bit more, but when I think there's a good exit point or it's at a peak, I'm probably going to exit my Chevron position and move that money somewhere else to potentially a place like Regeneron, which is up 8.64% this month. Regeneron had really good earnings. It had a bounce back from the floor it was at, around $500. This is a stock I've been buying for I don't know how many months, probably since last August, and I've been dollar cost averaging every month. This is, in my opinion, a great long-term stock buy. They have a lot of drugs in development. I think will do really well when they come out, if they come out, assuming they do. So it's just a company I've been stocking up on. The earnings bounced back. The price bounced up to around $650. So I'm pretty happy with that for right now. And then Amazon, you probably heard about this. Amazon had a big jump in price after earnings in October. So that was another stock I've been buying a lot the past couple months because I thought it was undervalued. So my position is doing really well in Amazon. So those are my best and worst performers. Let's look at the stocks I bought in my portfolio now to see what those positions look like. I bought some Microsoft this month. Here's my position. I have about 2.1 shares. The cost per share is around $420. So my position is up around 20%. Pretty good. Another stock I bought this month was Amazon. Bought right before the price jump, as you can see by that little dot before the spike up. Have about 6.24 shares. Got them at around $194 a share. So my position is up about 28.8%. And then the third stock I bought this month was Regeneron. You can see the little dots right before that spike up. Have about 2.58 shares in this Schwab portfolio. I also got some in my Roth IRA, but this portfolio has about 2.5 shares. My current cost per share was around $782. The stock jumped up to about $650. So I'm still down overall, down around 17%. But my goal is just to accumulate and lower my cost per share as much as I can because I think this is a good long-term stock. And here are my contributions, $66 in all positions for about $200 this month. That's how my portfolio is looking right now. Now let's look at the dividend payments I got in the month of October because this was a very good month. I actually got 3 dividend payments this month, but it was still very high because the first one was Altria Group, where I got $18.49. Did pretty well in my portfolio. The next was Realty Income, where I got $5.38. That's just a monthly payer. And then on the 31st of October, Halloween, I got $7.26 from JP Morgan. So that brought my total dividends for the month of October to about $31.13. My new monthly average dividends in my portfolio is around $26. And the new 12-month total, if I were to not change the portfolio at all, is at $319.46. So that means this portfolio can generate $320 a year for me. Absolutely hands-free, not too shabby. Hopefully, well, we'll definitely get that over $320 by the end of the year. Hopefully we can touch $330 before 2026. November is going to be a slow month. We're only getting one dividend payment, Realty Income. So it's going to be around $5 or $6 in dividends for the month of November. But hopefully we can find some new positions to potentially add to a watch list to maybe start moving some money around and make my portfolio have more growth because that's been the biggest red flag so far in 2025. But that's all I got for today. Thank you so much for watching. If you haven't already, check out this video. Peace.